Hi everyone, I'm Carl. Welcome back to the Renko Trading channel. Before we start, this content is for educational and experimental purposes only. It is not financial advice. Always do your own research before making any investment decisions. Most traders think they need better entries, a better indicator, a better signal. But in my experience, that's not the real problem. The real reason most trading accounts struggle is poor risk management. In this video, I'm going to show you how I manage risk using Renko charts so I can control drawdowns and stay in winning trades. You can have a great strategy and still lose money. That sounds strange at first, but it happens all the time. Why? Because positions are too large. Losses are not controlled. Traders keep trading the same way during a losing streak. Renko charts help simplify price action, but they don't eliminate risk. You still need a system to protect your capital. So here's the foundation of everything I do. I keep the risk per trade small. For me, that usually means around 1% or less per trade. The exact number isn't the point. The point is this: no single trade should have the power to damage your account. This does two important things. First, it protects your capital. Second, it protects your mindset. When your position is too large, every move feels emotional. And that's when mistakes start to happen. One of the biggest advantages of Renko charts is how clean they are. And that makes stop-loss placement much easier. Instead of guessing, I place my stop where the trade idea is no longer valid. Here are a few ways I think about it. A few bricks beyond the entry, below a swing lower beyond a key support level. If price reaches that level, the trade idea has changed. So I don't want to stay in the trade just because I hope it comes back. This is where most traders struggle. Risk management is not just about one trade. It's about what happens when things go wrong. Because they will. So I use a very simple drawdown plan. If I lose 2 trades in a row, I reduce my position size. If I lose 3, I reduce it even more. And if I hit full losses in a row, I stop trading and reassess. This doesn't mean the strategy is broken. It usually means the market conditions have changed. Because not every market is ideal for every strategy. Especially with Renko charts, this matters. When the market becomes choppy, signals can still look clean. But they are not as reliable. So instead of forcing trades, I step back. Sometimes the best trade is no trade. Because staying out of the market does 2 things. It protects your capital. And it keeps you mentally sharp. And while I'm waiting, my capital isn't just sitting idle. It can still be working in safer places, like money market funds or income-generating ETFs. So I'm not losing money. I'm preserving it and letting it grow slowly until the right conditions return. Now here's the other side of risk management. It's not just about cutting losses. It's about letting your winners run. This is something a lot of traders struggle with. They take profits too early and never let strong trends do the work. Renko charts really help with this. Because they reduce noise, it's easier to stay in the trade. Instead of exiting too soon, I trail my stop behind structure or use a brick-based trailing stop. And I stay in the trade until I see real evidence of a reversal. Here are a few common mistakes I see all the time. Oversizing, just because the chart looks clean. Moving stop losses, out of emotion. Trading every signal. Focusing too much on entries, and ignoring risk. Hoping the market will reverse, while losses continue to grow. Renko can make trading feel easier. But the underlying risk is still there. So here's my full process in simple terms. I define the setup. I define where the trade is invalid. I calculate the risk. I size the position accordingly. In this chart, this area here is what I call the base zone. This is where price stops falling and starts stabilizing. It's not a single point, it's a range. Once price starts moving out of this base, that's where I'm looking to enter. And I place my stop below the base, so I can clearly define my risk and position size. I monitor market conditions, and I adjust during losing streaks. That's it. It's simple on purpose, because simple is easier to follow consistently. Renko charts help simplify trading. Risk management is what makes it sustainable. You don't need perfect entries. You need a system that protects your capital and lets strong trades work over time. That's a wrap on today's breakdown. Thanks so much for watching. If you found this helpful, give it a like and hit subscribe for more Renko trading insights. Don't forget the bell icon, and I'll see you in the next one.